There's momentum, right? So we saw some breakouts in November and immediate positive follow through, and that tends to be bullish from a longer term perspective. As you mentioned, though, there's been a little bit of a loss of momentum recently on a short term basis as we've approached 20,000 for the Dow Industrials. And that's not really a resistance level, but somehow market psychology creates a little resistance at times near those round numbers. So this would be a very natural place for a pullback to unfold.
Well, and it also has come, as we say, the S&P 500 at an all-time high, and you've got overbought conditions, and maybe the market's a bit tired, correct?
Overbought and also overly bullish sentiment based on the transactional data like the VIX or the put-call ratio. So very natural time for a pullback, and I think it would be healthy to relieve that overbought excess that we've seen on the back of what was a 9% plus rally.
And here is the Dow. It has been an outperformer, I guess, since the election, and that looks like a pretty sharp vertical line. This is a 10-year chart right here.
Right. It's obviously a very impressive long-term uptrend, new all-time highs. But when we look at the downside potential to the 50-day moving average for one, it's more than 5% at this stage. So that does create a little bit of a worrisome setup again over the short term. I think that we should look for an opportunity closer to the breakout points that we saw in November to add exposure early next year.
So early next year, so we might be in for another one of these patterns where we finish the year pretty strong, and then January you have some payback?
Well, I've been of the belief that the pullback will actually start before year end. Yeah. So no Santa Claus rally. Yeah. We could be in it, right? No Santa Claus rally, which is typically the last 5 days of the year into the first 2 of the new year. So I think we might not see that this time because we actually have some momentum sell signals arising just now. So I think that'll unfold and take us into early January.
But not a replay, as far as you can tell, of last year when you really had kind of a very nasty correction into February.
I certainly hope not, for one, but pullbacks do tend to be somewhat fast and furious, and in a way that's actually indicative of a counter trend move. So what we'll be looking for is not only an oversold condition, but also the market internal measures. Those are things like breadth and leadership and sentiment to reach levels where they're at extremes, quite the opposite of what we've seen recently.
Now, so where does it take you in terms of an S&P target? We get some kind of a pullback here. You think it's a good entry. Where does it go?
Right. So it's essentially already met the short-term target from the breakout that we've seen. That was around 2285. But you can arrive at a longer-term target of about 2400. There's a round number for you, right? And that's from the breakout that occurred over the summer. And to me, that's very realistic still for Q1, and that's our upside. So when we see a pullback, we want to be adding exposure to potentially take advantage of that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.